Oh, you're fast.
Good morning, everybody. How are you doing? Okay. Uh, Aramide, your name look a little bit more familiar. Aramide Lawal. Your name look very striking. But no problem. Okay, so as usual, let's have two volunteers who will be willing to be our co-host for today. Right. So we have Gift. We have Gift, two volunteers who will be willing to be our co-host. We have Gift. Please note that you will have to stay on the call all through the class. That's one. Number two is that you will be willing to attend to us on the students' behalf. So you'll be checking the chat room, be sure that everything is in order and all of that. If there are concerns, you raise that and get that across to me. Right. Gift, we need one more person who'll be willing to be a co-host. And Clement. Okay. Gift, are you still interested? Think so. Okay. Please, Falashade raising her hand too. If you are raising your hand, please continue until you get a prompt that you are now a co-host. Okay. I believe you all are co-hosts now, so you can try to unmute your mics. Please try that from.
Yes, good morning.
Yes.
Yes, thank you. Thank you.
Okay. Okay. That works for everybody, I believe. All right. So that's fine. So let's continue. Uh, what's the name of the document that I'm using? What's the name? So I can put that up. Yeah. What's the name? Okay, area of concentration. Are we? I want to believe that by now you all have started solving many questions, as many as possible. I've tried to always respond to everybody who have asked questions, right? And I believe that's fine, right? All right, so let's get into this discussion. Mining, taxation of mining companies. Taxation of mining companies. So what are the things we want to note here? Uh, just tell me anytime you see my screen that it comes up. Just tell me. It's up. All right. All right. Good. So what is that big deal about mining? Number one is in your reading, you want to check out the tax incentives for mining companies. That's the theory part. You want to check out the tax incentives for mining companies. Just to mention, but a few. Number one is they have accelerated capital allowances. Right. They have accelerated capital allowances, and that's because qualifying mining expenditure will typically get a 95% initial allowance and 0% annual allowance, just like you're qualifying plantation equipment. So they enjoy accelerated capital allowance. Number two is they enjoy tax holiday, just like a pioneer. So any rule for pioneer will always work here. So they enjoy tax holiday, right? So that also works, right? Then there's also expatriate quota. So there is, I think, there's expatriate quota for them. So they have a kind of quota system that if the expatriate is of this threshold, they are tax exempt, tax exempt, and if they have local content too, they are going to enjoy tax exemption based on the fact that they have local employees and all of that. So that's part of it. So it's one area you want to read about. Right. Number two area you want to read about. If you have your question as usual, drop it in the chat room, or you keep raising your hand till the end of the first half of the class. So that way we don't distract anybody. Right. I hope that's fine for everybody. So that way you don't have to distract. Yeah. So if you have questions, raise your hand. So you keep your hand raised until the first half of the class, or you use the chat room. I believe my co-hosts are available to read your messages. So once it's time for the question and answer session, I'm sure they will read, and then we'll be able to provide solutions to those things. So number two thing you want to read is about the mining cadastre office. Mining cadastre office. You want to read about mining cadastre office. Just read about it. About the mining cadastre office. Just know what the mining cadastre office looks like. And also, then the next thing you want to read is just, it's not necessary really, in my opinion, but that you want to read about the Ministry of Mines and Steel, of Mines and Steel. All right, but now let's go to the interesting part of the course, or the interesting part of the topic is the computation. So number one is that qualifying mining expenditure, and that's the distinguishing factor here. Really, I'm sure you must have heard that mining is hard. Mining is hard. It's not hard. Qualifying mining expenditure. Enjoys initial allowance of 95% and annual allowance of 0%. That's one thing. Number two thing you want to note is that provisions of CETA applies for allowable, disallowable, taxable, and non-taxable income. All right, so that's that. Do you get? So that's basically the brief of the story. That's basically the brief of the story. Any question there? So sorry, I made a mistake. I didn't mean to ask any question. But that's basically a brief of the story. So let's get into some interesting part of this thing. Let's look at some computation. So the computation will help us drive home some of our points. I'll be able to okay. So we'll be able to look at some things together. So let's go to this question. This is, or this was May 2022 question 4. May 2022 question 4. So one of our co-hosts should make attempt to read for us so that we can get in the point. Okay.
Required as the manager, tax matters assigned to handle this matter. You are to forward the report to your senior partner, tax matter, showing a computation of tax liabilities of the company for the relevant assessment year, comment on tax incentive available to a company in the mining of solid minerals in Nigeria. As investors and policymakers adapt to the global energy transition in a bid to offer an effective edge against swings in oil prices, the federal government has recognized that it is beneficial for the country to diversify into economy. The attention of the country is now towards the development of the solid mineral sector. The Nigerian Minerals and Mining Act 2007, as amended, was enacted to regulate the industry. Incentive for operators in the sector as provided for in Section 5 of the Act. One of the earliest investors in the mining sector, Dusin Minings Nigeria Limited, was granted a mining title by the Mining Cadastry Office (MCO) for exploitation of limestone in Okalagu in the southeast zone of Nigeria in 2008. In spite of so many challenges the company is facing, it has managed to remain afloat in business. The company has, of recent, been having tax disputes with the relevant tax authority, and your firm of chartered accountant has been engaged to help resolve them. In in 2022 tax return filed by the company, the major areas of dispute between the company and the tax authority was disparity in the treatment of certified exploration and processing expenditure of 60,000 million incurred during the course of the year. Your firm is provided with the following extracts and supporting documents from the books of the company for the year ended December 31st, 2021. Turnover, exports,
All
local.
figures are all figures are zoomed correct.
Okay, the following additional information was provided. One, the figure for sundry income included an amount of 8.5 million realized as profit from disposal of the old excavating machine. Allowances for doubtful debt were made up of bad debt written off, general allowances for doubtful debt, specific allowances for doubtful debt, loan to customer written off. Three, included in donation was 5 million given to victims of environmental degradation as part of the company's social responsibility to the host community. Four, legal fees included an amount of 750,000, which was paid as penalty for late filing of tax returns. Can you scroll, please? Five, the tax written values of qualifying capital expenditure at the end of 2021 tax year revealed that motor vehicles 2 years remaining of 25 million, furniture and 15 utilized for 2 years of 22.5, mining expenditure 6 years remaining of 40 million.
So let's get into it. Right. So let's get into it. Do say mines. So I will, you see, the 20 marks question. So it's very simple. Imagine if you're able to do this, you know that, I mean, you're already there already. There are two ways to answer this question. The first one is not advisable, but there are two ways to everything in life, Abby. There are two ways to everything in life. The first one is you will tell them, my firm is not handling this matter. I'm a child of God. I must not lie. Therefore, I uphold the integrity of the institute. That's a very good way of answering it. But we want to answer this way now, which is, I feel, uh, for but that's on a lighter note. Don't go and do that in your exam. Oh. It's not me that advise you. All right. So what's the year of assessment, everybody? The year of assessment, we are given statement for 2021 and it's an ongoing business. So we are doing for 2022 year of assessment. Abby? So let's start here as usual. So we have this as our line items. So you would typically want to start from net profit, right? Are you with me? Am I alone?
Yes. No, we are
Cost,
with you. We are
cost,
with you.
cost. The idea of having cost is that you should drive the engagement. It's not good to be talking alone. No, I'm not working with radio station now, Abby. So that's the idea of
Yes.
having co. At least the co-host will at least drive the conversation. If I allow everybody, I'm sure we'll not do one question finish. But then the idea of having the co-host is that you will be standing in the gap for others. Do you get? So it's
Okay.
not that you need to mic and then no, I'm not working with radio station. I beg. 70, right? Add disallowable expenses, Abby.
Yes.
Don't forget, we said that the provisions of SITA will still work here. The provisions of SITA will work. That's the idea there. So disallowable so that disallowable expenses that we have. So let's start from the body of the question. We have excavating expenses. Excavating expenses has to because that's the core of their business, really. You know, they do exploration and excavation. So it is allowed. Do you get? Now you move straight to salaries and wages. Obviously, salaries and wages will be allowed, right? Then you move then to director's remuneration. Director's remuneration is also allowed. Director's remuneration is allowed, right? Then electricity and telephone, it is allowed. Electricity and telephone is allowed. Then transport and traveling is allowed. Allowance for doubtful debt, we want to check what is the breakdown so that we'll be sure that it is either allowed or disallowed. So let's check the allowance for doubtful debt. What do we have? So bad debt written off is allowed. General provision is disallowed, right?
Are you there? We can't hear you again.
General provision is disallowed. So right, general provision 500. Specific provision is allowed, but loans to customer written off. Loans to customers written off is this. You're not a bank. That's the idea there. Why are you giving your customer loan? If they need loan, they should go to the bank. That's why it is disallowed. Does it make sense?
Yes.
Yes.
Yeah. So now let's move on. So auditors and professional fees is allowed. Donation is allowed, but you know there are certain conditions that has to be met. So now let's check if we have donations. Donations, if the examiner is silent, is an allowable expenses. Do you get? Now, what you want to do now is to check the additional information. Do we have anything that addresses donation? Do you have anything that addresses donation?
Yes.
Yeah. No, three.
3.
Yes.
Included in donation was 5 million naira given to victims of environmental degradation. That in itself is allowed. And don't forget, we said that donations, if the examiner is silent, is allowed, right? So that corroborates that the whole of the donation is allowed because the examiner did not provide us information regarding the balance of 4-5. Does it make sense to you? Because donations in reality is an allowable expenses, except where we have additional information that proves otherwise. But don't forget, I'm talking about SITA here. Does it make sense to you?
Yes.
All right. So the next one we have is repairs and maintenance. We want to check your repairs and maintenance. What is included in repairs and maintenance? We don't have additional information. And the only reason why you would have repairs and maintenance to be disallowed if it has to do with refurbishment or renewal of an asset. If it has to do with the refurbishment and the renewal of an asset, that's when it is going to be disallowed. Does it make sense? But now the examiner is silent and there is nothing that indicates that it has to do with refurbishment, renewal of the assets. So for that reason, it is also allowed. Does it make sense? For that reason, it is also allowed. Any question so far? No question, Abby. So we have depreciation. Depreciation is bonus mark for everybody, I believe. How much is depreciation? 70,000.
40,000.
Then miscellaneous and general expenses. We need to check the breakdown. Do you have anything that relates to general and miscellaneous expenses? Any information?
No,
We don't have, so it's
no.
allowed, right? Legal expenses. Do we have any corroborating information about legal expenses? Let's check.
Yes,
Legal expenses, what they tell us. So we have penalty, Abby.
yes. 750.
All right, so let's move on. So we have bank charges allowed, insurance premium allowed. Exploration and processing expenditure is disallowed because that is qualifying mining expenditure. And that's what the examiner was trying to explain here, that the company has of recent been having tax disputes with the relevant tax authority, and your firm of chartered accountant has been engaged to help resolve them. In the 2022 tax returns filed by the company, the major area of disputes between the company and the tax authority was the disparity in the treatment of certified. The word certified could mean qualifying, exploration and processing expenditure of 60,000 incurred during the course of the year. So exploration and processing expenditure, right, given that it is certified, is a qualifying capital expenditure. And you know, any assets, any capital item should be disallowed. Do you remember? Am I alone?
No, you're not.
All right. Income tax provision obviously is disallowed. Abi? How much is it? 180,000. Also, education tax provision. We'll send them. How much is education tax provision?
5,000.
All right. So I think with that we good. So let me add it up together. What do you have?
$331,250.
I trust you. So less non-taxable income. Those are the non-taxable income that we have. So let's check the income side of things. We have exports, local sundry income. But we're told that included the sundry income was an amount of 8.5 million realized as profit from disposal of the old excavating machine. Right. So you have something called profit on disposal. How much is profit on disposal?
85.
You have 85. So how much is the adjusted profit? No, your adjusted profit.
322 to 750.
Eh?
32 to 750.
You've ignored the 752 up.
Okay. I was just giving you the
So our adjusted profit is 1,1075 and 20 naira.
0.5.
105
10.
1,075,020.
Like this, Abby?
Yes.
Yes.
So less loss relief. How much is the loss relief? Do you have any loss relief? Possibly loss from last year? Don't have any, right?
There was none. None.
So nil. Right? So you have your 1075 still coming backward. Abby, coming down, Abby.
Yes.
So right, then less capital allowances. So how much is capital allowances? So now we need to compute. We need to compute capital allowance. We need to compute capital allowance. So how much is the capital allowance there? Let me call you back in the class. We need to compute capital allowance. How much is our capital allowance? So let's go to computation of capital allowances. Please, you need to pay attention here because I think the examiner used one trick here that I have not illustrated. Sorry, that I've not illustrated before, right? So please pay attention here. So we have assets here, we have motor vehicle, right? We have furniture and fittings. You have your mining expenditure. And then you have, I think that's all. Your total. Right. So you have your initial allowance. We have 50%, 25%, 95%. Then you have your annual allowance, right? Your annual allowance here is 25%, 20%, 0%. Then you have all figures and types. Right. So sorry about that. So you have your tax sitting down value, you have 25,000, right? You have 22,500, and then you have 40,000, right? Then do we have any additional assets? Yes, we do. because there was an asset we
Yes.
disallowed, right?
60,000.
So, and we said if the ground of disallowing an expenditure is because it is capital in nature, you have to compute capital allowance, except where it is not a qualifying capital expenditure, right? So you have 60,000 naira. That's the only additional assets that you have. So I think we can have just bring them down to for further clarity. So 25,000, 22,500, 100,000, Abi. So let's say initial allowance. This one is not a new asset, right? Your motor vehicle is not a new asset, so it doesn't qualify for initial allowance. Furniture and fitting is not a new asset, is not does not qualify. But minor expenditure, your 60,000 will qualify, right? So you can allow for, you can compute your initial allowance for 60,000 only, because that's the only additional asset we have in that year. So what's 95% of 60,000?
57,000.
57,000. Right, so you have 57. Please pay attention, right? So we have annual allowance. Now, this examiner here, what he did here is, for the first asset, he told us 2 years remaining. So it means this asset has 2 years remaining to for as its useful life, right? And you know, we said in annual allowance is always on a straight line basis. So what you need to do in that case is to divide 25 by 2. What do you have?
12.
12 to 50. It's 12,500, I believe.
12,500.
All right. So furniture and fittings, you have, it has utilized 2 years. But typically, how many years is furniture and fittings expected to use?
5 years.
So if it has used 2 years, so how many years is remaining?
3 years.
Good. So then 2,500 divided by 3, what do you have?
7,500.
So 7,500. Then you have for this one, remember that your annual allowance is 0%. 0 times anything will give you 0. Right? So 12,500 plus 7,500 will give you what? 20,000, Abby? I think.
Yes.
Okay. So
Yes, 20,000.
TWDV here, you have 12,500. You have what again? 15,000, I think. 100 here should be 43,000. Please confirm this figure to be my stepmother in action. 77,000. So capital allowance, you have 77,000. Abby?
Yes.
So I have my total profit. How much is total profit?
99,998,020.
Like this, Abby?
Yes.
All right. So CIT at 30%. What do you have?
299,406.
And TET at 2.5%. I think 22 year of assessment, right? Okay. 2.5% of accessible profit. What do you have?
26,875.5.
26,875.5.
0.5.
So do you have a total tax liability? Or do you have
326 28 281.5.
all right? Yeah, so let's go ahead with your questions. Coast, please help me gather. Do you understand what we've done so far? That's basically it. And if you're able to do this, you have a 14 marks already. So, Coast, let's help gather the questions so that we can move on. So, I think
Can't really see question here. So, okay, the only question I can see is that are we not restricted to the capital allowance?
please say that again.
Some hands are raised up.
Yeah.
Okay, so
And
She
okay.
was asking a question, so that's what I wanted to.
No. I'm actually reading the question that people actually
Yes, that's what I'm
jotted.
saying. Please read the question again.
Okay, so the question I actually have here is that are we not restricting the capital allowance?
Okay, good. Yeah, you are not two, but even if you are two, just look at 7,000 as a percentage of 1 million, right? That's even less than 10%. And you know, capital allowance institution is 66 to third. So that's just the idea there. But typically, they are part of those guys that deal with the core businesses. So most of the time, their capital allowances will always be will be reasonably below their civil profit. So it's not necessary to restrict in that case. All right.
So
So
another question here is that what is the tax holiday they enjoy?
so the tax holiday they enjoy is same with Pioneer, 3 years, renewable for 2 years. Because they are Pioneer companies too. They are part of the Pioneer companies.
Okay, and that
I
question
think that's
here,
all the
does
questions.
does commencement rule apply to mining?
Yeah, it applies if you are told that it's just commenced operation, and you. So in that case, they will structure the question more like a Pioneer question. So if they structure it to be more of a Pioneer question, then obviously commencement rule will apply. But for these guys, an ongoing business, so there's no need to apply commencement rule. All right. So let's go with the answer. I believe we've answered everybody's question in the comment. All right. So Basirat. Basirat. Okay, it was a mistake, I believe. Yetunde. Okay, Kemi.
I think you have to omit them.
Okay. Okay, I had forgotten. Although it's sweeting me that they are not answering anyway, so that we can move on very
Good
fast.
morning, Michael. I'm here. Ken is there. Good morning, Michael.
Yeah, good morning.
Good morning. Okay, I want you to clarify something to me, because here in this world that we just solved now, you
Yeah.
say we are not to calculate initial allowance for the old item.
Yeah.
But that has been my issue. I have some question that initial allowance was calculated for the old item. You can even see I've been bombarding you a message from your private WhatsApp. Do you understand? I am so convinced about this thing.
Okay.
But
So in
here
the
now,
case,
Initial was not calculated here, but some question initial will be calculated for all the assets.
The only reason why initial allowance will be calculated on old assets is pioneer. Will be pioneer questions. And that's because we will assume that they were purchased after the tax holiday. So technically it's a new asset. Do you understand? Because during the tax holiday, they don't enjoy initial allowance. So technically we would just imagine that it is a new asset. Does it make sense to you?
Okay. But under CIT, are we
Mhm.
still calculating? We will calculate initial allowance for old assets under CIT.
No, that's what I'm saying. No, only new assets. Because again, let's go back to the definition. Initial allowance is once in the lifetime of the asset. In the first year, the asset is put to use.
Yes.
You understand? So it is only in the first year that you compute initial allowance. Only in the first year that you compute initial allowance. Does it make sense now?
Yes.
So I'm sure the only reason why you would have initial allowance is if the asset is to be an additional asset. Do you get?
Okay. Okay. Thank you.
You're welcome. All right, Basirat.
Yeah, good morning. Thank you.
Yeah.
I think it's pretty much straightforward. So the only thing is, for the donation that I said yes is allowed, except in cases where, except it meets some conditions. So I'm saying if on the face they
Except if
didn't
it doesn't meet some conditions.
okay
Except if it doesn't meet
meet
some
some
condition.
conditions. So on the
Yeah.
face of the question, if there is no additional question to donation, is it right to check before allowing it regardless that it is not more than 10% of?
So the only donation restricted to 10% is your donation to funds established by the government.
Okay.
Do you understand? So in that case, but technically your donation must be made out of profit. That's the rule of thumb for all donation.
Yes,
So if you're a loss
yes,
making
yes.
guy,
There's
you shouldn't allow donation in that instance.
different schools.
Because what is making you happy that you're even donating self?
Okay. Okay. So the
Yeah.
first rule is just make it out of profit.
Yeah,
Okay. Then it is when you are in loss then you start raising eyebrow that.
exactly. So
Or
why
if it
you
is
giving them
but if it is for government body and all of those, then we need to check that
the
it is
10%
10%
threshold?
of
Yeah,
accessible. Yeah.
profit. Yeah. And I believe that's a question people would want to ask me, that I didn't do the 10% issue here. And the reason I didn't do it here is if you look at 5,000, 5,000 as a percentage of 750 something thousand is less than 10%. Is less than 5% of itself. So I don't need to, but and I know I'm aware that my adjusted profit will always be more than the net profit or loss every given time. I'm very sure of that. That my adjusted profit will always be more than, so that I don't need to go through the stress of saying 10 over 110 like I did for that in Kowa in my first question. Do you understand what I did? What I'm saying now, Basirat?
Yes. Yes.
Yeah, so that's it. Have I answered you? All right. Yetunde. Yetunde. Yetunde is not on the call yet. So, Victoria.
Thank you. So I have two questions.
Okay.
First, the annual allowance for the what's that other item, mining or something,
Yeah, mining expenditure.
that was zero.
Yeah.
You gave an explanation. I didn't hear you. Please, can you
So,
just
the rule here is 95 0%, 95% initial, 0%
okay?
annual. Zero
Mm,
times any zero times any figure is always zero. Abi?
yeah.
So that's the idea.
Okay, thanks. Then the second question is the education tax
Mm,
is 2.5%, right?
yeah.
Of accessible profits.
Yes.
And our accessible profit here was 998, right?
Your accessible profit here is no 10750. Your adjusted profit is same as your accessible profit.
Okay,
Yeah,
thank you.
you're welcome. Or let me do it this way. So for some people who may still want, yeah, so let me do it this way so that you can always see it and then we move on. Silas,
Yeah, good morning, sir.
good morning, Chief.
Sir, my question is good morning, sir. My question is on when you are calculating all those costs, you started with a tax written down value instead of cost. Sometimes I used to get confused about it, so I don't know if you can just clarify me on that. Why you use a tax written down value when you are doing your computation on capital allowance? Thank you, sir.
Okay. If it's a commencing business, you start with cost, really, because there was nothing to start up with. But in this case, it's an ongoing business, right? So there were some assets that this guy had before, right? So those assets that he had before, you just then that's what forms the bulk of the tax down value, or that's what forms tax down value basically. So it's after that you now have some additional assets to it. So you cannot start from addition. There's something on ground before you had to it. So it's just logical to start with personal value if it is an ongoing business. Does it make sense?
Yes, sir. Thank you.
Yeah. Latifa,
Hi, good morning.
yeah, good morning.
Please, can you explain better on taxable income and non-taxable income? I'm always mixing this up together. Thank you.
So taxable income is income in the ordinary course of business. Any income that is any income that is non-taxable will definitely fall under the taxable threshold. So I think it's better for you to understand non-taxable income. So there are basically few expenditures that will fall under non-taxable. You have one, your dividend income, because it's franked in nature. Number two is income that is capital in nature, right? Income that is capital in nature. So, say for instance, profit on disposal, right? Profits on sale of investment, stuff like that. Then you have your, are you with me?
Sure.
Yeah. Then you have things like your unrealized exchange gain and stuff like that. But it begins with you understanding what non-taxable income is. Obviously, the taxable income is the opposite.
Thank you.
You're welcome. Sunday, Sunday. Okay, Fola Shade.
Thank you. Good morning again. Okay, so my network was interrupted when you started doing the capital allowance. Please, can you kindly put your screen on that capital allowance, please? Thank you. Thank you. Okay, so based on what you just said, and I heard you telling other people, I understand the reason why we cannot do initial allowance for the tax written down value. Okay, and you said we can only do that for pioneer during pioneer period because when we are doing pioneer, because we believe that those assets are just purchased after the pioneer period. So I understand that part, but the annual allowance, I'm trying to understand how you did this annual allowance. My internet was restored back when you were saying they should divide it by two, all those things. I realized that in the question, the what's it called, the capital allowance expenditure, those items, I can see remaining 2 years, remaining 6 years. Was that the reason why we are dividing it by two? And how did you really calculate this initial allowance? That's my question. Thank you.
Okay. So your motor vehicle, right? You were told 2 years remaining, and you know your annual allowance is going to be on a straight line basis, right? So if your annual allowance is going to be on a straight line basis, so it's going to be 2 years. Sorry, just a minute, please. Okay, so sorry about that. So I was saying that for a motor vehicle, right, you have 2 years remaining, and we said that it's going to be on a straight line basis, right? So because it's going to be on a straight line basis, so 2 years remaining means you have 2 years to use for it to use. That's why we're dividing that by two. For furniture and fittings, right, it is 3 years remaining because it has utilized 2 years, and the asset is supposed to use 5 years. So it has 2 years remaining. So that's why we are dividing that by three. And even for mining expenditure here, it is irrelevant. The 6 years remaining is irrelevant because your your asset rate is zero, right? Your asset rate is zero. That's for your annual allowance. And obviously for your initial allowance, it is 95% on the value of the new asset. That's how I got the initial allowance. I hope that clarifies your question. Folashadi.
Yes, yes, I think so. So that means there's no point in we're not going to touch the tax written down value to get the initial allowance at all.
No, it's not. It's
Get
not
the
on
annual allowance.
annual allowance.
We're not going to touch the tax written down value to get the annual allowance.
That if I get, I want to believe that you're asking regarding mining expenditure.
Yes, please.
Okay, so in that case, yes, you are correct because it is 0%.
I got it very, very well now. Thank you so much. Thank
You're
you.
welcome. You're welcome.
Morning, Michael.
So
Good morning.
okay, that's fine.
This
Yeah,
Sunday
good
online.
morning, Chief. That's today, right?
Yeah, yes, morning.
Yeah, I called you
Well,
before. Yeah, that's fine.
yes, sorry. What I would actually want to clarify has to do with area where we need to pay attention to at times when we are in the main thing. This, I've noticed that you approach the answers directly, not much of workings. When we are under some condition, do we just approach it? Because all these workings attract marks. I want to get it from you because
Okay, you mean
you are,
so, so so you mean so you expecting me to show it on my question on my answer sheet that I'm doing 25 divided by 2, 20.5 divided by 3, things like that, right?
does it not attract marks if you have it separate like
No, it
that rather
doesn't
than this
attract.
straightforward?
It
Because when
doesn't attract
you
mark.
check when you check the marking scheme, you see some things, some areas which the
No,
marks,
it doesn't attract any mark.
the workings.
No, it doesn't attract any mark. No, it
Okay.
doesn't attract any
And
mark.
then
It doesn't attract. Let's look at the marking scheme here. I believe I should have something like that here. So what you was let's look at this question number 4 and let's use that as a case study. It doesn't attract any mark really. So I believe the examiner. So okay, heading. So the treatment of exploration and processing expenditure is 1 mark. You showing net profit as per account is half. General allowance is half. Loans half. Legal fees, blah 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 blah. So now you will see that capital allowance, when you get to the capital allowance side, are you with me? You notice that
I'm with you.
what the examiner attached half mark to here is your ability to show your tax return value, attract half mark, your ability to show that there's an addition, attract half, your ability to show that there's initial allowance on mining, attract half. There's no mark attached to the computation of the initial allowance.
Okay.
Does it make sense now?
Yes, it does.
Yeah. So
Well,
your ability to show that your capital allowance is 57 attracts half. Ability to show that your annual allowance, your computation of each of the annual allowance attracts half mark. But mind it is the figure that attracts the mark, not you showing that. And I will advise you, there's no time in the exam really. So just make sure you're
yeah.
able to maximize the time. Does it make sense?
Yeah, it does. It does.
Mm.
That's number one part of it. The second aspect I want you to look to confirm is that when we in the body of the question,
Yeah. Yes, please go ahead. Hello, can you hear me?
Yes, I think it's his network.
Okay.
You will see that there are some expenses that
Hello,
you have
Mr.
this
Kule.
thing, and we have to then further our findings to the additional
I didn't get you. I lost you for some. Sorry, I lost your thoughts.
information and
Your line is not stable, Mr. Tunde.
So, pending the time we sort that, I think let's move on to Babalola.
Oh my
Hello,
God.
Mr.
Hello?
Kule. Good
something
morning.
concerning the the
Mr. Tunde, your line
body
is not clear. Please, can you use the
of
chat box? Your line is not clear. Please, can you use the chat
question.
box? Thank you.
Having one
Mr. Tunde, please, you might need to hold on for now. Please, can you use the chat box? Please.
can you hear me
Okay, good morning, Michael. Please, I have a question. My name is Oluchidike.
now?
Okay, hold on. Everybody, hold on. Everybody, hold on. Hold on. Hold on a minute. Mr. Tunde,
Mr.
you may
Michael,
want to log out and log in again. I didn't hear you. But pending the time that you do that, let's allow others ask their questions. Right. So the next person on my list here, the next person on my list here is Babalola. If you have questions, I believe you should raise your hand and wait till you are called, right? But Mr. Tunde, I will advise that you log out and log in again or try to restore your internet. But pending that time, Babalola, you can ask your question.
All right, thank you. Can you hear me?
Yeah, I can hear you. Please go ahead.
I've got two questions, but then the first one on capital allowance, I think I've been able to solve that myself. So the other one is on donation, which someone has raised earlier.
Yeah.
Because you said, yeah,
Go ahead. Go ahead.
hello. All right, thank you. Because you said, people are like, I think someone asked, why are we not restricting it to 10 over 110? But then, like, based on conditions to disallowing donation is when it is capital in nature. And you also mentioned for that in core also, which I think, yeah, they made a loss and the donation paid out was also capital in nature. So that was why we had to add it back. So does it mean that any figure we see now, whether it is capital or not, we should disallow? Because even from this their company operation, it's in billions, and they made a donation of 5 million naira, which I think is still no capital regarding the company's operation. So now, like restricting it to 10 over 110, is this something we should do, or I don't
No,
know?
I didn't do it. I didn't do it here. If you notice, I allowed the whole of the donations. Right,
Yeah.
that's why it's not here. I allowed it. So that answers that no, you
All
shouldn't
right.
disallow it.
Only disallowed when it is capital in nature, right?
Correct. And it does not meet is not made to the or is made to the unapproved bodies.
Yeah.
Yeah. So that's it.
All right then. Thank you.
You're welcome. That's all right. Okay.
Michael, Oluchi is here. I'm raising my hand.
Hey, if you've raised your hand, just hold on. I will call you. Hold on for
Okay.
a minute. Just hold
Okay.
on here. So
My
Ahmed.
question is not even much. What year question is this? Because I joined late.
Okay. So May 2022 question 4.
Okay. Thank you.
You're welcome. You share a chance, Mr. It's not good though, but no problem. If Ahmed Ibrahim.
Good morning, Mr. Michael.
Yeah, good morning.
So, please, my question is on this restriction, 2/3 of accessible credit for capital allowance. Is it just for CIT, or
It's for CIT basically.
okay? Then this issue of donation, are we to do this 10 over 110 when the company makes a loss, or
Okay,
regardless.
so
Okay,
so
you can go
it's,
ahead.
it's a rule of, so it's not boxed up to only when a company makes a loss. So now look at what I just said. For instance, you have a profit. Let's say you have a net profit of 10 million, and you're making donation of say 5 million already. So it raises a question that way. Doesn't make sense. So I will first
Yes.
disallow it and then do 10 over 110. But say for instance you are making a profit of 10 million and you are doing net profit now this time and you are making a donation of 200,000. I mean, even that's less than 2% of 10 million, right? So even after adjusting it, I'm sure that if you've noticed, your adjusted profit is always higher than the net profit.
Yes. Yes.
So in that case, it's just sweet to move on with your life and don't add back 10% and then add it back and then start doing 10 over 110 that way. It's just if you do it that way, you're going to be right at the end of the day because you are picking the lower of the two. But
Yes.
it's a longer way. It's a longer way to arrive at your destination.
Okay, so basically, we should look at the net profit and the donation before we now make a decision. An example.
Exactly.
All right, thank you.
You're welcome. Aramide.
Yes, good morning. Actually, the question I wanted to ask, someone has already asked, and you've answered it, but I didn't really get it very well. So to make it easier for me and for most of us, I think you should make a list of all allowable expenses and all disallowable expenses under this mining and exploration.
Okay, so the truth is this. Even not only for this class, I really do not like giving students a list of formats. And the reason is that I've noticed that in this part of the world, including myself, we are lazy. So once somebody gives us a list, we've confined that the person has automatically boxed us up. Right. So I believe so much in solving many questions, and the more questions you see, the more exposed you are to list of them. In fact, even the best textbook of this world can still not list all of them, to be honest. Does he answer your question?
Yeah, thank you very much.
Yeah. Edina, you are the one that accused me yesterday. I've forgiven you. Edina,
Good morning.
yeah, good morning.
You understand. Sorry for every inconvenience. My question is this competition we just did now,
Yeah,
our education tax,
yeah.
assuming we have loss relief, where
So it's
where
not.
are we charging it? Are we charging it on this
It's,
adjusted profit or
yes,
accessible
it's on that
profit?
adjusted profit is
Is
the
it
same
should
as
it be after or before loss
it's
relief?
before loss relief. It's before loss relief. Before loss relief. In
Okay,
fact, I will do
so
a question now. I will do a question now that will address
because
it.
this thing is confusing.
Yeah.
So we
It's
don't know.
before.
I don't really know where to charge the education tax on, whether adjusted profit or loss relief
Okay,
or
so
accessible profits.
accessible profit is the same as adjusted profit. Accessible profit is the
But we know we have adjusted profit. Then we now less our loss relief, and then we
so
arrive at another profit
it's
again.
before it's before loss relief, not after loss
Okay,
relief.
okay. So the education tax is before loss relief.
Yeah,
Thank
correct.
you. Okay, thank you.
You're welcome. I would solve one more question that will help me address it. So that at least we'll be sure. All right. That's I don't want to spoil your name, so let me call you your surname. Anima Sharon.
Sadia Animation, sir. Good morning.
Sadia. I just want because I know Shadia, but I don't know Sadia. That's why I just prefer to do animation.
Fine, thank you.
Yeah.
So my question is on capital allowance. This tax written down value. For instance, now
Okay.
this particular question, our tax written down value was for 2021, and we started computing annual allowance for 2022. I saw a particular question in the past question where tax written down value was given for 2020 and we started computing capital allowance for 2022. 2021 was cheap, so I don't know. Where do we start computing annual allowance for when we're giving tax return that value? Is it immediately the preceding year or how? I don't understand.
So it's still preceding year, basically. Capital allowance follows the year of assessment. So it's going to be preceding year.
Okay.
Yeah.
Thank you.
All right. Yusuf.
Good
Yusuf.
morning, everyone.
Yeah, good morning,
Good morning,
Chief.
everyone.
Good morning, Alaji.
Sir, my question is on the other income when it comes to the financial statement.
Okay.
Is the other income a taxable or not? Because I can see the revenue, cost of sales, gross profit, then other income. So can we capture other income as part of the income that we can tax we can tax it?
Yes, if you don't have any additional information, it's taxable.
Okay.
So that's
Thank
it.
you, sir.
That
Thank you,
answers
sir.
it, yeah. Yeah, you're welcome. Abbas.
Good morning, sir.
Yeah, good morning, Chief.
Thank you so much for this opportunity. So my question here is under this non-taxable income. If you notice in this question, we less profit on disposal of machine. What if you have in the question, maybe you have loss on disposal of machine? How
So
are you
that
going to
becomes disallowable expenses.
Okay, it will fall under the non-taxable.
No, it becomes an expenses that way.
Okay, thank you so much, sir.
All right. So Nathaniel.
Yeah, good morning, Mr. Mike. Well done, sir.
Thank you.
Okay. My question is on this capital allowance, the restriction, the 2/3 that we normally do. Is it applies here? Is
No,
it
no, no,
applied?
no.
Okay.
Why?
That means it doesn't apply in mining business, right?
Yes, it doesn't apply because technically they do extraction. So that's part of their enjoyment, basically. What they do is extraction of this thing. So that's part of their this thing.
Okay, thank you so much.
You're welcome. Olumide.
Sir, please, now I still have a question, please.
I've answered you now. Maybe you chanced me that time.
Yes, I didn't chance you. I didn't even
Go
get
ahead,
to.
go ahead,
Please.
go ahead, go ahead.
Okay. Mr. Mike, good morning. Thank you so much for all you've been doing. Then, first of all, do you know that answer I didn't get? You say, what year question is this? Because I actually joined late.
So that's May 2022 question 4.
Okay, May 2022 question 4. Then again, I know you've been throwing more lights on the issue about dividend. Sorry, not dividend, donations. I've been understanding it, but I want you to explain again to me based on, like, now I know donation is disallowed when it's not to the appropriate body. Then how do I explain the other part where I will now do 10/100/10? So just explain that part. That's the part I'm getting
So that's
confused.
donation. That's donations to funds created by the government for the purpose of natural disaster, war, or crisis. So in that case, we are looking at donations to say for COVID-19, for Boko Haram victims, stuff like that, basically.
Okay, fine.
So in that case,
So
that's where you now do the restriction.
okay, so I should do the restriction. How the decision is to what? That's the part I didn't
Yeah,
understand.
that's 10 over. That's what I'm saying. So in that case, your donation is restricted to 10% of accessible profit.
Okay, why should I do the donation? Is it that the donation is higher than the accessible profit, or what? Explain that
No,
part.
so you should do it because that's what the rule is saying. The rule is saying that your donation must not exceed 10% of accessible profit, right? But what I always guide is what I always tell you is this: that if you notice that the guy made a net profit, And at
Mm-hmm.
first sight, your donation is already higher than 10% of the net profit. Just
Mm.
go ahead and ignore the donation. It will always work in that instance.
Okay.
Yeah.
But where you don't ignore it, that's when you do this
Yeah.
one
So
over
I
one
believe
over
I
10.
believe my
Then,
solution on that Adikowa will help that way. So you may
okay,
want to refer
fine.
to that
Yes.
solution here.
Fine.
Yeah. But
Fine.
yeah, that's it.
Then, okay, sir. On my another question is on capital allowance. Like the capital allowance, they said tax written down value, and they showed the number of years it was remaining. So when we're in that case, that means initial allowance have been taken now.
I didn't get you.
I didn't understand. I didn't. Sir, can you please show the workings again on this capital allowance, please? The capital allowance or appendix. Okay. So now you in the question they said capital allowance was remaining 2 years remaining, but you computed the initial allowance. If it's remaining 2 years, that means
On which asset is that?
okay. So don't worry. Maybe I will go through so I don't ask nonsense question. Maybe when you finish, you can just help us make a snapshot like you did last time and put it on the platform. If I can print it and go through on the
No
capital,
problem. I will
because
send
I
it. I
actually
will always
joined
send
it.
it. I will always.
Joined it.
No problem. No problem. Just call
Mm.
me in case you have any question. Just drop your questions on the group. I'll be willing to answer them. Although it's just that
But
once
make
I
a
drop,
snapshot. Make a
yes, I will
snapshot
send
of it.
this document is
Proud.
yours. After the
Pardon?
class, just take it. I said this document is your own.
It's okay, sir.
Okay, no problem.
It's okay.
Mr. Michael, you are referring to call. Maybe we'll start picking call after the exam.
No. But to be fair, I've always answered everybody who dropped question on the group. To be fair, I think I've answered everybody on the group. To be fair, only for the person that now asked me that. All right. So if you have any question, just drop your question on the group. I'm very sure.
Hello, I'm not asking one question.
Yes, I know. I will call you now. Sorry. So just drop your question on the group. I will definitely answer. But once we open the group, it's just that there's only one person that will always overdo, that will make us lock the group again. But please don't overdo this time when the group is open. I beg you. So that every other we don't infringe on other people's right of expression that way. All right, Olumide, I believe you are the next person.
Yes, good morning.
Yeah, good morning.
My question is that I can see provision for education tax.
Yeah.
Under, I think, disallowable.
They don't need to
Yes.
make a provision for education tax. That's the young one,
Okay, education tax provision. Okay, is it a disallowable expenses?
Yes, it's disallowed.
Okay, income tax provision and education tax provision. They are
Yes. So
disallowed.
you don't make provision for that's what we are computing here, right? So why should you provide for what we are computing in the first place? That's the idea behind it.
Okay. Thank you so much.
You're welcome. Yeah, Charity.
Okay, good morning, sir.
Good morning.
Yes, thank you for the lecture. So my question is that if during the period the mining industry acquires a plant and machinery or plant and equipment, are they entitled to investment allowance?
Yeah. It's entitled to investment
Like it
allowance.
doesn't matter like whether it was 2019 or 2020, any time they are entitled to investment allowance.
No big. So beginning from September 2023 is scrapped already. So it's that period that matters.
Okay. So it's
Yeah.
still the same rule of CIT.
Exactly. Mining is basically under CIT. The only thing that differentiates mining from CIT is just the idea of mining expenditure and then the idea of the tax holiday thing. That's just the only thing that differentiates them. So the tax holiday, the principle of pioneer will work there, But every other thing, your CIT provisions is what we still apply at the end of the day.
Thank
You're welcome.
Okay, based on what you said now, what's the difference between mining and the PIA itself? Do there
Obviously.
exist any similarities?
So mining is taxable under CIT. Oil and gas is taxable under PIA. Do you understand?
Okay, now I understand. Yes,
Yeah.
yes.
All right. So is that have I answered Charity?
Yes, yes, you have answered me.
Okay, Babalola.
Thank you.
Okay, thank you. Well, my own is still on the restriction of capital allowance. Because
Yeah.
they said we don't restrict only for agri and manufacturing, and we can restrict to third of acceptable profit for every other business. So now you said mining, there is no restriction. So does it not
Yes.
qualify for every other business?
I didn't get you.
Okay, under condition for restricting capital allowance, you don't restrict for you charge full capital allowance for agriculture, primary agricultural company and manufacturing company. So which means you don't restrict for them, but then you restrict for every other business based on what
Yeah.
the question says. And you said for mining, there's no restriction. So my question now is, does mining companies in mining, do they not fall under every other business? The
No,
position.
no, because the mining is a little bit more specialized, right? So because they deal with extraction, and the space is still not yet saturated,
Okay.
right? So that's why there's still full allowance for mining.
Okay. Then secondly is not a question, but it's a suggestion. I don't know if it's possible for me to say or regarding these are questions and answers and lectures.
Okay.
Can I proceed?
Yes, yes. Go
Oh,
ahead.
thank you so much. Okay, well, like I said earlier, some of us we've got just freaking alone to quickly read and prepare for. And of course, we students, our questions are unlimited. Because I've asked question before, now I'm asking question again because of what I heard earlier, which was not clear. So we are based on my own suggestion. Since we've got host attending to every other thing. Now my own suggestion is that if you have questions, we can drop on the chat box, of which I've even been doing before. And of course, some of the students they've been replying to my questions on the group, which is quite okay. So if anyone has questions, they should ask on the platform.
Chat room.
Yeah, the chat room. The host will read it out. So this is just for us to cover a lot of questions because as
Yeah.
it talk now, if another person answer question and I don't understand, I'll still raise up my hand again and you will still answer me. So
Actually,
because time is
actually,
going, some of
yes.
us
So
we
what?
have just weekend and we've got plans to read too, so that we can catch up on time. We can't keep spending like 7 hours lectures, 6 hours lectures,
Yeah,
so be able
I
to have time
understand.
to read.
I
So
understand.
like
Although what?
after you've done every other lecture, like we are done for the day, if we now have someone who wants to, like, who is still not clear, after putting it on the chat, you can make like two hosts. If one is not saying the question properly, the other one will see the question properly. So the two hosts
Okay.
will be assisting us in reading out the questions. So if you now think, oh, you are still not satisfied with what has been said, or with with how the roster have read out your questions and how the lecturers have explained it, if you think you're not satisfied, then after the thought, like after we've done with the class, you can now open the chat room. If you know you want to answer question, now it is now free for you to answer question. At least you are done with class. So it is now left for us that we know we have weekend, whether we want to stay on the chat or we don't want to stay on the chat. It is now left for us to stay or not. So that's my own
Okay.
suggestion. I don't know if it's.
Okay, that's fine. I will consider that. Thank you.
Thank you.
I will consider that. Although what I intend doing is that anybody I don't answer, I have actually restricted the time in my mind up to 8:40. That anybody that doesn't raise hand and I'm not able to answer before 8:40, so that the person will go to the next question window. That has been the approach I've been using basically.
But then,
So
having
I
that
understand.
approach, it means there are some people that don't even ask question at all. So it won't pay them, it won't be of benefit to them if at 8:40 they've not even asked question at all. And this is me that I've asked question earlier and I've asked another one again.
The way the algorithm of Google Meet is set, is that the earliest, the first person who raises hand comes first.
Yeah.
So it means that anybody who I'm answering after you, right, raised hand after you've raised your hand the second time.
Yes.
Does it make sense?
Oh yes.
So it's the first in, first out approach. So that I think that's fair enough for everybody. You just have to be very fast about asking your question.
Because questions they're like repetition.
Yeah, they are repetition, of course. But then it's I just feel question as a way of making things easier for everybody. Yeah.
We should just solve more time and finish on time.
Let's continue.
No problem. Yeah, Uchena.
Good morning, Mr. Michael. My question is simple. This capital allowance restriction, is it 2/3 or is it 66/2/3? Please.
Everything is the same thing. So if you punch your calculator now and you do 62/3 times 100, you get 66.67. If you do that in decimal, you get 62/3. So it's the same thing.
Please repeat again. What did you just say?
If you do 2/3 times 100 in your calculator, you should get 66.67. So if you do that in decimal, you get 66/3. It's the same thing.
Okay, thank you.
Yeah.
Thank you. Understand now.
Oladipupo will be the last person I will attend to. Right. Then we'll go to the next question. Oladipupo.
Yeah, good morning, sir.
Good morning, Chief.
Yeah, thank you very much for the class, although I joined late. So I realized that we've mentioned some restrictions in terms of capital allowance, donation, and it cut across board. So are there any other restriction we need to take notes?
No, when you get to that place, we will discuss it. But off the top of my head, I'm not sure there's any other restriction that you have to take note of for now. But like I said, sometimes you say things and then you have to change.
Okay. All right, thank you very much, sir.
Yeah, exactly. So that said, now let's move on. So, post over to you. So I'm meeting everybody. Again. So this time around, I think, let me check for one more question. There's one question I want to solve. I don't know where this guy is. So okay, let's do this. This is what year is this? This is November 2022, question 7. November 2022, question 7. So let's go. Okay, so for the B part of this question, are you with me? For the B part of this question, on my YouTube channel, right, I have discussed or I've taught what's the name of this thing now? I have taught tax accounting and reporting on my YouTube channel. So you can just go there and check for tax accounting and reporting. You have to watch the video to be able to understand, to be able to answer question B. It's a very fresh topic, and I don't want to deviate from what I've already told you to. I don't want to deviate from my course outline. But if you're so much interested in doing the B part, just go ahead and check your tax accounting and reporting. It's actually hinged on IAS 12, income tax provision, right? So I hope that's helps. So what I'm saying in essence is I'm really solving the A part that has to do with mining. All right. So can somebody please read?
Question 7. The issue of. Can we go to the requirement first?
Okay.
For me
Yeah.
to start. Required, you have been directed by your principal partner to work on this assignment and present a draft of the report to him for review before sending it to the managing director of ICT REC Mining Company Limited. The report should show explicitly the computation of the company's A, tax liabilities for the relevant year of assessment. Say we're not doing B.
Yeah.
The question, the issue.
Sorry, go ahead. I said, women has a way of us saying things in such a way that you feel guilty of something, Sha. I don't know why I feel guilty. Go ahead.
Question 7. The issue of correct computation and presentation of deferred taxes in financial statement has been a source of worry to the managing director of ITC Itrek Mining Company Limited last year. The Federal Inland Revenue Services raised a query on the financial statement of the company and the annual tax return filed for purposes of tax assessment. In order to avoid query of the financial statement, your firm of chartered accountants have been approached by the managing director of the company to assist in the preparation of financial statements suitable for presentation at the annual general meeting of the company and to the tax authorities for purposes of determination of tax liability payable. All the relevant books of account have been made available to you in respect of the company's financial transactions. The extract from the account of the company for the year ended December 31st, 2021 revealed the following. Can we scroll, please? Additional information. The following additional information was provided. 1. The interest on foreign deposit was repatriated to the countries through the company's domiciliary account in a Nigeria deposit money bank. 2. The company has unrealized losses of 2.8 million. 3. Capital allowances as agreed with the relevant tax authorities for the year was 7.250 million. 4. The tax written down value of qualifying capital expenditure as of December 31st, 2021, after the above capital allowance have been taken into account was 35.110 million. Can we scroll up a bit? Thank you. Why the net book is okay. Why the net book value on the same date was 23.7 million. 5. The opening tax written down values and net book values were 42,620 and 33,900 million respectively. 6. Unpaid taxes at the beginning of the year was 15.620 million, while payment in the year was 18.860 million. 7. Assume a depreciation rate of 10% per annum on its mining plans. 8. The company revalued its mining plan during the year ended December 31st, 2017. The revaluation surplus there, from which amounted to 6 million, was reflected in the company's financial statement for the year. That's all.
So thank you. So let's just start ICT recommend. So again, if you want to, if you are interested in solving the B, you want to watch that video so that you will get a full grasp of it. Right, ICT rec, what's the name? Mining. It's a very, very short question. Of liabilities for, so what's the year of assessment this time? 1, so it's for 22. Yeah. Of assessment. Net profit. How much? How much is net profit? 3320, right?
320.
Add this variable expenses, right? So the expenses that we have. So let's just check here. So we have salaries and wages is allowed, right? Depreciation is disallowed, right? Are you with me? Of mining plants, you have 25, 340. Then depreciation of order NCA. How much is that? 2,500, Abby. Are you with me? Then loss on disposal. Disposal of old mining plants. So you have 850. Then loan
I'm
interest.
sorry, I'm picking the wrong figure. Depreciation on mining is 25, not 35,340.
Step
25,340.
Step mother.
Then the other one is 7,840. 7,840. The loss is 200, not 850.
200.
Yes,
The
not
guarantee is
850.
too much. Party for you. I like eating granite. Okay. So any other disallowed expenses? So do you have? What do you have? Any other disallowed expenses? Look, this is allowed. Right. Should we come in?
You have 10,540.
Less non-taxable income. So do you have any non-taxable income? Yes, I have dividend income.
Yes.
Right, 3,900 Abby. And also have interest on fixed deposit, interest on foreign deposit.
3,900.
Interest on foreign deposits. You know, income earned from abroad and abroad through appropriate channel is disallowed, is non-taxable. So that's why this note was important, because the guy was telling us that although if the examiner is silent, you would have assumed that it's also through appropriate channel and it will be non-taxable. But the law provides that interest on foreign deposit that is repatriated or brought into Nigeria through appropriate channel is non-taxable. So that's why this information one was provided initially. Does it make sense?
Yes.
750 total now. Please add it to what do you have?
6650.
6650. So you have your adjusted profits. How much is adjusted profits?
34,210. 34,210.
Less loss relief, Abby. Do you have loss relief?
Yes.
Yes, 2,8.
Yes.
2,8. All right, then you have
34.
31.
31,410.
Huh?
31,410. 31,410.
All right, less capital allowances, Abby. How much is capital allowances?
7,250.
750.
All right, so you have the total profit now.
24,160.
Like this, Abby?
Yes.
Yes.
CIT 30%. What do you have?
7248.
Then TET at 2.5% of accessible profit.
855.25.
That's on 34 to 10, Abby.
Yes.
855.25. So what do you have in total?
8103.25.
8103.
8103.25.
All right, so that's it. Very simple. So like I said, that's the answer to the A part of the question. So like I said, for the B part, you may want to just visit that video to have more clarity. I'm sure if you watch the video, you should be able to attempt the B part. I'm very, very sure of that. Right, but I don't want to bore you with all of those competition. That's why they were given the evaluation, depreciation rates, on pay tax at the beginning, and all of that. But I explained all of those things in the video. If you must, if you want to get that part. All right. So that said, your assignment. I think mining was tested last diet. I think so. I think mining was tested last diet. Was it? I think it was tested. That's for, yes, it was tested. It was tested. Question 7 last diet. So you may just want to check that question, lay your hand on it. That's your assignment. I think I've solved it. So if you've solved it, I will definitely share my solution with you. Does it make sense? I'll share my solution to you with you. So with that, we can drive further discussions on the platform. All right. So any question on mining generally before we move on to capital gain tax?
Mr. Mike, someone said, can you share the link for that B part? Can you just share the link instead of them? Yeah.
Let me just check. YouTube. No, sorry, just a minute. Yeah. So I just want to share the link. That's why I'm doing all of this. So. But while I work on sharing the link, wait, yes, it's what am I looking for? The Falasade, do you have any question?
No, not at all. I'm fine. Thank you.
I mean,
I saw
from the
there's a
post.
question. Yes, I think there's a
I mean,
question.
from the chat room.
From the
Yes.
chat room. All right. Let me check.
Yeah, okay.
Okay.
Is it now?
Okay, so somebody asked that what figure did they use in computing for TET?
It's 2.5.
That's the adjusted profit.
Okay. There's adjusted profit.
So another question, why did we charge 30% for CIT? Is the company not a medium-sized company?
How is it a medium-sized company? Well, let me check.
What's the revenue?
Yeah, I understand. Yeah, but how much is the revenue? Yeah.
That's 8320 or so.
8320. Are you sure?
Oh, sorry, no, that's not it.
This 125,400,000. Abi?
Yes, 125,400,000.
Yeah, so that's a large company already. Isn't it?
That's 100 million and above.
Yeah.
The large company. Okay, all right.
All right. So is that all?
Yes, some other questions there is not clear. There's a particular question that says,
You do it like that.
which was
We'll find clarity. Don't worry.
okay, which was deducted from the adjusted profits? I don't know. I don't understand that question.
So it's loss. It's loss that was deducted from adjusted profit.
Loss. Okay, loss relief. Okay.
Okay. Next one.
Okay. So there's another question here by Doe Ella. The law on income from foreign deposits and dividend, is it not just on mining or CIT or in general?
It's applicable generally. It's applicable generally. So additional information 4 and 5 will help you to do tax accounting and reporting. So it doesn't affect this. I've shared the link already. So I think that's all right.
So somebody is saying that, please, I noticed we didn't have use of additional information 4 and 5. Is that true?
4 and 5, yeah. From note 4 down to note 8 is meant for you to do the accounting and reporting side of things. So it's supposed to answer, that will help you answer the B part, not the A part. Right? Because there's nothing you want to do with taxes and value when you're already provided with the capital allowance, right? There's nothing you want to do with unpaid tax at the beginning. So all of those things will help you to do the tax accounting and reporting side of it. All right, just watch the video. It will help you.
I think that's all.
Okay, so if that's all, do you have anybody raising hand? So ask on the group, not DMO. Ask on the group. We'll open the group, ask on the group. Because DM people don't really get much attention. So because I mean, I'm sure if I should do DM now. Yesterday, before I slept, I had over 400 messages, and in my head, I was like, how do I respond to 400 people? So just so that I'll make sure I don't miss any question on the group. Yeah, loan interest is allowed, right? How do you get capital if not from loan? It's allowable. Yeah, anybody else can do that. I've actually shared that with you. Okay, so let's move on to capital gain tax for the want of time. The class is supposed to end what time? I think 12, Abby.
Yes, 12.
On. You still foul. So wait, no problem. Uchena. Okay. So let me I will stop this Q&A session by 9:10. So if you are raising, please raise very fast by 9:10. All right, Esther.
Good morning, sir.
Good morning, Chief.
So please, I need clarification. I'll be drawing a bit backward, but I need clarification on it. The solution to Highlander is on capital, is on a company income tax. So when we're solving the capital allowance, the written down values was for the year ended 2020. I know it's on preceding year basis. So I was thinking it should have been when solving, the solution should have been 2021, but our solution started from 2022. The addition was in 2021, but the tax written down value was for 2020, December 31st December 2020. So I was thinking we would have solved 2021, bearing in mind of the tax written, then the addition comes in 2022. But in our solution, the addition and the tax written down value all came in 2022. So I got confused while going through it. I don't know if you get me.
To be honest, I'm lost. The sad part of it is that I don't cram questions, so I'm not even able to relate at all.
I
Do you
don't
get?
I think that's the question, November 2023.
Okay, you know what?
question 1.
If it is a trend you're having and it's not pertaining to mining, really, I will advise you that you can either wait behind after the call, or you chat me up, or just find a way around it. Because the sad part is I don't cram questions, so I'm not even able to relate to any of the things you are saying, and I don't want to go through the rigor of finding the question, others dragging people behind, and all of that. Do you get?
All right, so.
All right, no problem. Hassan. Okay, Abbas. Abbas.
Yeah, are you there?
Yeah, I'm there.
Okay, so please, I needed more clarification again. Under PIA, you told us that if we want to get our accessible profit, that means we need to we need to deduct our loss relief before we get our accessible profit. So in this case of mining, why are we not lessen our loss relief before getting our adjusted profit here?
Because mining is on CIT.
Okay, it's on CIT.
Yeah, mining is on CIT.
Okay, now I get. Thank you so much.
All right. You're welcome. Alexander. Emmanuel. Okay. Edina.
Yes, sir. Thank you, sir.
Okay. I thought you wanted to
Good
speak
morning.
to me. Yeah, good
Hello,
morning. Please
sir.
go ahead.
Please, I just need clarification on this
No,
frank investment.
Emmanuel first. Hasn't gotten to your turn. Emmanuel first. I will refer to you shortly. Yeah,
Thank
Emmanuel,
you,
please
Mr.
go ahead.
President. Sorry, you called Alexander. I could not unmute. I just did that now.
So Emmanuel has begun to speak. So let Emmanuel speak first. I will refer to you shortly.
Okay, that's
I'm
fine.
sure
Thank
you
you.
need to unmute your mic. All right.
All right, thank you, sir. I've been throwing the question in the box, and disturbing gifts all the time. So let me just ask directly. You were explaining something to someone not quite long regarding the application of donation 10/110, something like that. Then you are now making a comparison of when to apply it, as such as having probably, I think, net profit of something, and I don't really get that part. I'm trying to understand in order to save time in the exam. When are we to apply this donation of 10/110 something? Where
So
not to apply it?
if a company makes a loss, so I advise you go that route of doing 10/110. First disallow it, then do 10/110. But if a company makes a profit, net profit, right, and you are seeing that your donation on a normal ground is even less than 10% of the net profit, you can just as well allow all of the donations and then move on that way. That's what I was trying to say.
Okay, I think it's
Because
direct.
your accessible profit is going to be, your adjusted profit is always higher than the net profit every time.
Yes.
So
Yes.
if it's already higher than, if it's already lower than 10% of net profit, definitely it's going to be lower than 10% of accessible profit. So you can just move on and then just do what you're supposed to do.
Okay. I think.
All right.
All right.
Yeah, Alexander.
Okay, thank you.
it's just like a clarification. You know, a lady was asking at what point do you deduct your accessible profit?
You deduct the loss.
Do you have to deduct your loss relief first before because what you did here now is the adjusted profit was deducted from the adjustable profit, but now we have a loss relief. You know, in the former question there was no loss relief.
Yeah.
So on this one now has a loss relief, but we now have to do our TET on the adjusted profit. But
yeah, so again, your adjusted profit doubles as your accessible profit under common income tax. I understand where you're coming from. I understand all of your concerns. I'm expecting this because a lot of people have already said that in your books you will always have adjusted profit, less loss relief, this accessible profit. That's what you always have. But I'm saying that your adjusted profit doubles as your accessible profit. So you have to reconcile that by yourself. I understand your concern.
Okay. Thank you so much.
Yeah. But every time adjusted profit is always the same as profit under CIT. It's only under PIA that you deduct loss relief from adjusted profit to arrive at your accessible profit. That clarifies?
Okay, I think that's where the misunderstanding came from. Okay, it's fine. I think it's clear now. Thank you so much.
Yeah. Edina. Edina is the last person I'm going to be attending to. Edina. Okay. So she's not available. So let's move on. All right.
I'm available. I'm available, I beg.
Yeah, please go ahead.
Please, I just need more clarification on this. For example, now, if we have net dividend in the question or net rent, please, how do we treat it?
So for the point there is this: rent is allowable, rent is taxable. So rent, anything you have there, just move on with your life. Don't tamper with the rent at all if it is incorporated in the revenue side of things. So you don't need to
I'm
stress
thinking
yourself.
of rent received, sir. Sorry, like
I know,
rent
that's
received.
I know that's what I'm saying. Rent is taxable. So whatever you have as income is good to fly like that. But for dividend, anything that you deduct it for, you realize you say I didn't bother moving changing this one to gross. It's not necessary. They put 3 9 here, I put here. That's all. That's it. Whatever was added in income again, that's it. It's the double treating. It was added before deducted. It was deducted before added back. So whatever was there, that gross is what you should do. Do you understand?
Sorry, come again, sir, please. The network is breaking from your end there.
It's not from my end.
Yeah,
Yes, your voice was breaking.
I thought you would support me. But no problem.
Sorry for that. It's just the part.
So, no problem. I know where I belong. No worry. So now what I'm saying here is this: your dividend, right? It was net before, and that was what was added as your income, and that is what you should deduct. That's all. That's offset. So you don't need to convert it to gross or start doing gross back, gross in. That's it. Do you get my point?
Yes.
Is that grossing up is not necessary, is my point. Are you getting it?
Oh, okay, sir.
Yeah.
Because I saw in one solution, sorry, sir, there's one solution, they gross it and then now come and deduct it in tax liability.
It's deducted tax liability. Okay, that is for your rent. That's withholding tax, right? So again,
that's what the question I'm asking now. That when we have net of rent and net of dividend.
So now, what the idea there is that your dividend, right? Withholding tax on dividend is the final tax.
Yes.
So that way, you don't need to you don't need to deduct anything from your dividend and from your tax liability again for the dividend, because withholding tax on dividend is the final tax. But withholding tax on rent is an advanced tax payment, right? So what you need to do in that case is that whatever is the withholding tax on the rent, you will still go ahead and deduct it from the tax liability. Because by advance tax payment, you mean withholding tax was paid in advance or tax was paid in advance. So you deduct it from the tax liability. Is that what you're asking? Is that what you're asking? So
Yes.
in that case, for your rent, if you are going to go that route, in that case for your rent, you have to convert it to gross, to as part of the taxable income. Although if it has already been added as income already, you can as well just move on. If it was the gross amount that was added as income, you can as well just move on and move on with your life. Do you understand? Because rent is taxable income. Rent is a taxable income, but dividend is non-taxable. Does it make sense?
Okay, rent is non-taxable.
Rent is taxable. Dividend is
Okay, rent
non-taxable.
is taxable. Okay,
Yeah.
okay,
So that's it.
okay. Thank you.
You're welcome. All right, that's. Let's move on. So up to the next question window. Now to capital gain tax. So I will ask. So if you have questions, just keep your hand raised. I'm sure hand will not pain you. I'm very, very sure it will not pain you. So let's just please bear with me. Just that we just have to find a way of managing the population so that we move and at the same time we add value. But hope you've enjoyed the class so far. Hope you have added anything to your box. Okay. So if you want to gross up, just divide by 0.9. You will get your gross. All right. Thank you. All right. Good. 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 I enjoyed the participation. Please don't sleep. Oh. All right. So let's move on to capital gain tax. All right. So what is capital gain tax? Capital gain tax is actually the tax paid on chargeable assets, right? Tax paid on chargeable assets. That's what capital gain tax is. It is tax paid on chargeable assets. And basically it's computed at 10%. And your filing is done twice in a year. Your filing is done twice in a year. Your filing is done first. Your first half is filing is done in June. That's any transaction you have between January and June is done. Your filing should be done in June. And any filing you have between July and December should be done in December. So your filing is done twice in a year. So that's basically it. So every other thing I will discuss in your questions. We'll discuss as we solve questions. I think that helps us move faster. All right, so let's quickly just play with some questions here. I think I'm almost done with my area of concentration that I gave to you, sir. Am I? Am I?
We
Oh,
think
am I?
so. We think so. We'll look through.
I don't think so. No, so you.
Almost.
Yeah. And Edna was accusing me yesterday about forgiving you. As I said, I was weak. I was weak. You weak me. Like, sure. Actually, so yeah. Let me even check. My next contact period with you is on Thursday next week, right? And in that class, I think I've treated all of this. So in that class, I'll be dealing with transfer pricing, specialized business, general education, and trade blocks. I can do that in that class. But I think I'm done with this. And if you know all of these topics I've treated so far, to be honest with you, you don't have any. If you know all of them, to be honest with you, you don't have any problem at all. You don't have any problem at all. Just make sure you are strategic, have a lot of these things in your arsenal. When I'm in house, I don't mean the one that lost against PSG.
Sir, please, somebody was asking if you can include double taxation.
If I can include double taxation. Okay, no problem.
Yes.
If I have time, no problem. You also want me to include double taxation. That's why you quickly now use the
Yes,
advantage.
sir, please.
No problem. If we have the time. Okay. Capital gain tax. How come I'm not seeing these questions? Waiting up now. Sorry. Okay, so let's deal with this question first. This is May 2023 question. Question 5, I believe. Yeah, let's go.
Can we go to the required? As the company's accountant and who is also in charge of preparing and filing of tax returns to the appropriate tax authorities for each of the listed transactions, you are to A, compute the capital tax, if any, compute the rollover relief, if any. C, determine the cost at which capital allowance will be granted to the company by the tax authorities on each of the newly acquired assets.
All right.
Fashion Stitches Limited Lagos is a private limited liability company that deals in sewing and sales of clothes and allied materials for medium and upper class clients in high-brow areas of the country. Apart from its core staff in the sewing unit, there are others who are usually on the move, traveling to major cities such as Abuja, Kaduna, Ibadan, and Port Harcourt to receive orders from clients. While reviewing their activities in the first quarter ended March 31st, 2022, the operating officer stated that the recent increase in cost of traveling and staff salaries, which had jumped up by over 150% compared to the corresponding period of 2021, had impacted negatively on the financial performance of the company. The management took a decision to relocate the business to the Federal Capital Territory, FCT, Abuja, where over 75% of their clients reside on or before November 15, 2022. Implementation of the decision will, however, involve the disposal and reacquisition of some assets needed for the purpose of the business. The underlisted transaction took place between April and October 2022. 1. A property, plant and building in Lagos, which was acquired in 2008 for 80.22 million, was sold for 6,500 million. Incidental cost of disposal included estate valuers, fees of 1.627.5 million, renovation expenses of 1.8, and advertisement cost of 250,000. A new property was bought in the FCT for 80 million naira. 2. Sewing machines and other tailoring equipment brought between is everybody muted, sir?
Yes, I can hear you. Please go ahead.
Okay. 2. Sewing machine and other tailoring equipment bought between 2015 and 2019, which are now considered to be outdated, for 3.3 million, were disposed for 2.8 million. New set of machines and equipment were acquired for 7.130 million naira. 3. A 10 kVA generating set, which cost 1.5 in 2017, was disposed for 1.9 million, and other one was acquired for 2.450 million. That's all.
All right, thank you. Can we go ahead? So now let's quickly move on. So this basically is looking at capital gain tax and rollover relief. And rollover relief will typically occur, right, when you sell an asset, right, and then you now the proceeds from the sale of the asset, you invest it in another class of in the same class of assets for similar purpose, right? Then in that case, you have rollover relief. Does it make sense? So, say for instance, you show the land, and then you purchase another land. In that case, when it is assumed that the sales proceeds for the first one was what you used for the to buy the second one, and in that case, you will get what is called the rollover relief. So let's just say computation. So there are three types of rollover relief. We have one is called the full rollover relief, right? The second one is called the partial rollover relief, and the third one is called no relief, right? No relief. So no relief is when you do not reinvest the amount in similar class of assets. But don't worry, all of these things is better explained with numbers, so you will understand it one after the other, so I don't have to rush you. Because anything I say now, I'll still have to repeat myself again. So let's pick the transactions one after the other. We have three transactions here. We have property, we have sewing machine, and we have generating set, right? So let's go ahead. Can you see my screen?
Yes, we can.
Okay. Is it not too tiny?
Yes. No, it's okay.
All right. Are you with me? So let's start from this property. We were told that the property, land, and building in Lagos, which was acquired in 2018 for 18.2 million, was sold for 26,500. So you have your sales proceeds. How much is your sales process? How much did you sell the assets? 65,100. Now, the formula for determining your capital gain, right, is basically your sales proceeds less incidental cost to sell, like your agent's fee, valuer's fee, your commission to agents, stuffs like that, incidental cost to sell, advertisement cost, things like that. And then less your cost of acquisition, right? Another incidental cost to that acquisition. So that is what you will call your capital gain. Are you with me now? So sales proceeds. Are you with me?
Yes, or with you.
Less. Are you tired?
No.
Cost of acquisition. How much was the asset at the time the asset was purchased?
18,220.
Zerabi. So that the incidental cost to sell, we have valuer's fee, Abi.
Yes.
How much is that?
1,627,500. 1.627.
Like this, Abi?
Yes, yes,
All right, renovation, Abi.
yes.
How much is renovation?
1.8.
1.8.
Like this, Abi.
Yes.
Then you have advertisements.
Yes.
How much is
250.
erratic?
250.
Right. So how much is the whole of this?
So 21,897.5.
21.
897.5.
Now, so technically this would have been a capital gain. I will still have to delete this capital gain I'm writing. Oh, right. I will still have to delete it, but let me just put it here for now. So technically, this would have been a capital gain if he had not bought an asset. Do you understand? Assuming he didn't buy a
Yes.
new asset without proceeds, this would have been a capital gain. So how much is that?
43,202.5.
Like this, Abby? So
Yes.
assuming he didn't buy another asset, this 43,202.5 would have been the basis for us determining a capital gain tax. But now that he bought a new property, right, and they are within the same class of assets, so what you do is you less rollover relief. Don't forget we said rollover relief occurs when the proceeds from an asset is invested in another asset, right? Are you with me? Now, to determine your rollover relief, are you with me? Talk to me now.
Yes. Yes, well with you.
To determine your rollover relief, it is the lower of another principle you must know there. But it's very simple. Your sales proceeds. How much is the sales proceeds? You have 65,100.
65,100.
100.
Right? And the amount you invested. So how much the amount you invested is the amount you used in buying the new assets. How much did you use?
80 million.
So which one is lower?
65,100.
55.
Sales proceed.
100. Right? Are you with me?
Yes.
Less the cost of acquisition of the old assets. So how much was the cost of acquisition of the old assets?
18,220.
So if we deduct the two, what do you have?
46,880.
Right?
Right.
So in that case, but you know, you cannot, if you say 46,880 here, is higher than this one, right? So,
Yes.
are you with me? So just say
Yes.
there's nothing like capital loss, basically, because what we are doing is capital gain. So you say capital gain nil. Because this 46,000, or should I show it this way? No. Okay, nil, Abi. Then CGT at 10%. Will then be nil. So in this case, you say it is a full rollover relief. So now I can explain it and it will make sense now. A full rollover relief, this is a full rollover relief. That's when the amount you invested is higher than the sales proceeds of the asset. Right? Why the partial rollover relief occurs when the amount you invested is lower than the sales proceeds of the asset. Does it make sense to you now? So let me write it there. So that will make more sense to you shortly. So let's do the second asset. Are you with me, please? I'm not feeling this.
Yes. With
Yes,
you.
sir.
So what's the second one? Sewing machine, Abi.
Yes.
And other tailoring equipment. Same format. What's the sales proceeds?
For 33 million.
No, he bought it
No,
now.
no, sorry. No, sorry.
It was sold for how much? 2.8, Abby.
Was disposed for. So there are two of them. They're disposed for 2.8. Okay.
Yeah. Less cost of acquisition. How much is the cost of acquisition?
3.3.
Eh?
3.3. 3.3, yeah.
So capital gain. The cost of acquisition is already more than Abby. It's already in
Yes.
late. So in this case, there will be no relief. Because if you want to even relieve, what are we relieving? So although he invested, but in this case, there's no relief because there was no capital gain from onset that can be used to relieve the value of the new asset. Do you understand?
Yes.
Yeah, so the three, what's the name of the third asset? Generating set, Abby.
Yes.
So what's the sales process?
1.5.
Less cost of acquisition.
1.9.
No, cost of acquisition cannot. Sorry, it was disposed for 1.9. Abby?
Sorry, 1.9. Sorry about that.
No problem. So what's your supposed capital gain? Should have gotten how much? 400, Abby.
400.
But then
Yes.
he invested the amount, Abby. So let's
Yes.
roll over relief. So that's the lower of Abby. Sales proceeds. How much is sales proceeds? 19.
19.
How much was reinvested?
2,450. 2.
Like this, Abby.
Yes.
So which one is lower now?
1.9.
Less cost of acquisition. How much is the cost of acquisition?
1.5.
1. So in this case, you have 400, right? Capital gain will be nil, Abby.
Yes, Neil.
GT 10% also be what? Nil. You can imagine capital gain tax is that simple. Any question? So with this, I've answered A and B together. But in the exam, if you ask this way, I will advise you that. So what you would do is this. From here, from this rollover relief part, down to this area, that's this shaded part. You now redo it again. You do it as the B part. So that's when you are going to get mark for it. So just show it as working. And then, so same for here. Which one again? This part highlighted. So you just show it again as your solution to the B part of the question. Do you understand? Because that's what the examiner wants you to do. All right, any other thing?
No.
So the C part, they determine the cost of the asset that will be used for capital allowance purposes, right? Obviously, it's the new cost of the asset that will be used for capital allowance purposes, right? The cost of acquisition is what will be used for capital allowance purposes. So let me just say, let me answer the B part. See, the cost of the assets shall be used for capital allowance purposes. That is for property. How much is the new asset? 80 million, Abi.
Yes, 60 million.
Yeah. For sewing machine, how much is that?
7,130,000.
7.13 million. And for generator, you have how much?
2,450,000.
0.45 million. So that's the cost, basically, that we use for capital and purposes. And with that, you have a 15 marks. Free mark. Jesus. I feel this thing is too cheap for 15. And you say you are. I feel so, to be honest. All right. So let me accommodate your questions now. All right. Do you have any question in the chat room? Folashade gift.
Yes, well, yeah.
Do you have any question in the chat room?
Yes, we do.
Yeah, so please go ahead.
So somebody asked, what happened to the newly acquired assets?
What happened to it, as in?
I think for the that should be for the sewing machine.
So there's no relief. The sewing machine moves on with his life. Just that in determining the capital gain tax for this guy, there's no capital gain tax for him at all. That's what we are saying. So since there's no capital gain tax for him at all, he's not going to get a relief. What we are just looking at, the idea of the relief is just something to reduce your capital gain tax liability. That's the idea from onset. So not that they are giving you any extra thing. It's not a bonus kind of. It's just a tool to reduce your, what's the name now? To reduce your to reduce your capital gain tax. I think that answers your question. Right?
Okay. Some people
Next
just
question.
want you to recap again. They missed out. They want you to recap from top to the end.
That's going to be difficult. Small. I will not lie to you. But wait, I will see what I can do. I'm not good at recapping, but let's see what we can do. Possibly what our advice is for those set of people, they should just try to stay on the call. I will have to re-explain some things again. Some of these provisions in some other topics or some other areas of the class. So maybe that will work. But then I will still recap anyway. And in the course of the question and answer, you will get more insight to these things. If you have specific questions, I'll be willing to answer you. All right. Does that answer everybody on the call? Is that all the questions on in the Q&A box before I permit?
I think that's all.
Okay. I think that's all. So now this Q&A session is supposed to last for 10 minutes. So by my time is 9:44. So once I start permitting, it's up to 9:45. I'll be strict with time, 9:45, and then we'll move on. So I believe your hand should be raised already. So it's not my fault. I really wish to attend to everybody. I mean that. Okay. Deborah.
It's a mistake.
Okay, no problem. Deborah.
Good morning, sir.
It's a mistake too, Abby. Good.
No,
Rashid,
it's not a mistake. Oh, it's not a mistake. Can you hear me?
I wish it's to be. Yeah, go ahead. I want it to be mistake. Cool.
Ah, it's not a mistake.
Okay, go ahead.
Okay. Yeah, so my question is, for the last question we saw, like the mining question we saw, you said that if we are given the capital allowance in the question, then we don't have to recompute capital allowance. What of in some cases where, like there's some CIT questions you solve that you see that you are given capital allowance in the questions, but they'll still provide information on some qualifying capital
Your network is
expenditure. So,
bad.
can, can you hear me?
Can you hear?
Yes, I
I
can
think it's
from
from my
here.
end. Okay.
Yes.
If you can hear,
So, can you hear me
please
now?
go ahead. It's my network.
Okay. I said that you said, like from the
But
mining
Deborah, do you
question we
want to
saw,
type?
you said,
Hello, sir.
I think he has
Hello.
the call.
I can't hear
I
you,
think he
to be
has.
honest. My network is
Uh-uh.
bad.
Mr. Mike, can you hear me? Oh.
Hello, sir. Hello, Gift.
I can hear you. I think him is having network issue. I can hear you.
All right, thank you.
I don't know if am I still on this call? Hmm.
I think he's having flat battery.
Yes. Let's just wait for him and see.
Please, does anyone have the code? My battery, my laptop will soon go off and it's telling me with my phone I need a code. Does anybody have the code, please?
I think maybe
The
the
code is
code
that what the code is that posted on WhatsApp. That link posted on WhatsApp. That's the code.
SDK
SDK
slash underscore NKKW.
is dash. No underscore
Yeah.
dash.
Oh, dash. Thank you.
Thank you very much. Thank you.
Hello, Deborah. Can you hear me now?
Sir, yes, I can hear you now.
Come
Can you hear me
back.
too?
Okay, thank you. Yeah, okay. So
So you can hear me now, right?
yeah, I can hear you. It's better now.
Okay. So I said that the question we solved on mining, you said if we are giving the capital allowance in the question, then we don't need to recompute again. But in some cases, you might see some questions that you are giving capital allowance, then they'll still give you information on some qualifying capital expenditures. So at what point do you know that you have to compute capital allowance, especially when you are giving information on those assets?
So in
Do you
that
understand my
case,
question?
yeah, I think I understand your question. In that case, if you check the question very well, what you will see in that question is capital allowance brought forward and capital
Okay.
allowance excluding the qualifying capital expenditure. There's something in the question that will note. I think I've come across that question before. There's something in the question that's prompted you to do the capital allowance. I think I've come across that
Okay.
question before. Let me check. It was tested one that like that. I think I've come across it before. But there's one information there that prompted. They didn't tell us that the capital allowance was the agreed amount. Or they told us that it's excluding one thing like that. But there's an information there that will prompt you. Sorry. I can't remember the year now. So you see this one, this is a very good example. This is November. No, what year is this? And I want to believe this question you're referring to November 2023,
You're
question
not
7.
sharing your screen, sir.
Yeah, okay, I'm not seeing my screen. Sorry. So can you see my screen now?
Yes.
So November 2023, question 7. You will see this guy here. What he did here was to tell us that capital allowance computed. You have the brought forward amount. You have the current year. But you see this clause here, excluding current year capital expenditure. You saw this statement here. That's telling you that it did not include the current year capital expenditure. In that case, you have to compute. So there's always something in the question that will prompt you to show that he omitted something one thing or the other in the computation of capital allowance. Does that answer your question?
Yeah, thank you. So it means we have to recompute it, then add up everything we have,
Exactly. So
including the
in this
ones in the
case,
question.
you will compute capital allowance, right? And
Yeah.
on the face of it, yes, let me look, because I'm not seeing the list of qualifying capital expenditure here, but I know that this guy is disallowed. All right, I know this guy is disallowed, so you need to compute. And we said any asset you are disallowing on the ground that is capital in nature, you have to compute allowances for a capital allowance for it. Right, so you do for this guy, and this guy too is also disallowed. Development and processing expenditure is also disallowed on the ground that is capital, because it's also a qualifying mining expenditure basically. So I think that clause is speaking to this, but I've not read the full question basically. But I think that clause is speaking to these two stuffs basically. But you can solve it you can solve it and then share on the group your solutions. So that's November 2023, question 7. You can solve it, share your solution.
Thank
I
you.
think I've solved it before. I'm not sure. But if I can find any of my solutions, I'll share with you too.
Okay,
That's
thank you
fine.
so much.
You're welcome. But then you know our rule, you have to solve it. I would have seen your attempt or your questions before I now present solution. All right.
Okay, sir.
Rashid,
Thank you.
Hello, sir.
Rashid, it was a mistake to Abby.
No, it's not a mistake. Oh. Let me ask my question, sir.
Go
So,
ahead.
sir, so under mining, you mentioned something about the application of loss relief. So I was trying to get you the other time.
Application of loss relief.
Yeah.
I think what I told you, or I think what you, if I want to believe what you are talking about, I think is regarding your, what's the name now? Your capital allowance. I mean your accessible profit. I think that's what you're talking about.
Okay.
So I was saying that your mining is the same thing with your company income tax. Do you get?
Okay.
I think that was what I was talking about, but I can't remember. I can't recall it, my thought again.
So, okay, loss relief. There can be loss relief under mining as well, abi? So
Sure.
it's the same way we apply it under company income tax that we will apply it under mining.
Yes. Yes, it's the same way.
Oh, okay. All right.
All right. All right. Hassan. Babalola.
Okay.
Yusuf.
Hello.
Okay. Babalola. Go ahead.
Okay. All right. Okay. Please, I'm still on this capital allowance restriction. Okay.
Yes.
It's for I'm coming here. Okay. For financial institution bank, do we have restriction for capital allowance?
Banks?
Yeah, financial
Yes, there's
institution.
restriction for banks. There's restriction for banks.
What of minimum tax?
Yeah, minimum tax revision applies to bank too.
Minimum tax and capital allowance restriction.
Yes.
Okay. Also, please, on what's it called? These are hydrocarbon tax. I noticed that you allowed purchase of information on existence of petroleum deposits. This is why is an allowable expenses.
I only allowed the geo part of it though. If you check very well. It's only
Yes,
geophysical. Yes, that's geophysical and geochemical is allowed.
like anything geo, right?
Yeah, anything geo is allowed.
Okay. Okay,
Yeah.
yeah. Then, huh?
I said that's it.
Okay.
But don't worry, I will still come to the general questions.
I want to go. I'm feeling sleepy, please. That's why I want to know the
So
question.
others on this call are not feeling sleepy.
No, like
No,
I'm so tired.
it's not fair.
So I just want to. I mean, just like two questions, like just yes or no answer. That's it. It's not like I said it's much.
Okay, go ahead.
Thank you. So, please, debt treat. Okay, for debt treating off, we added it back. Okay, yeah.
It's allowed. It's allowed
Yeah,
now.
it's allowed.
For PIA, I believe.
No, for CIT. Debt treating
Debt
off is not added to disallowed expenses.
is an allowable expenses.
Yeah. What of debt recovered?
So it's an income basically, and typically, if you check your breakdown, it's always deducted.
Yes.
Yeah, so that means they've treated it the right way already.
So what if we have debt recovered?
It's taxable. That's what I'm saying. It's taxable.
So for debt recovered, how are we going to solve it?
That's what I'm saying. I've answered you. So debt
Are
recovered.
we adding it back? Are we adding the debt recovered
You don't
to?
add it back. So provided it's treated the right way, just move on.
Okay, we are not no. Okay, it won't affect our calculation.
No personal adjustment to it again. Once you have the figure as treated appropriately, that's in your computation of your provision allowance for doubtful debt. If your
Yeah.
debt recovered is in jacket already, you just move on with your life. Just pick the general provision and move on.
Okay. Yeah.
Yeah.
Is it please? Is it possible that post pioneer that we have first year of post pioneer? Is it possible for a company to make loss in first year of post pioneer?
It's possible.
If it's possible, assuming from the pioneer period they made loss, so how is it treated? Since we know
The loss of the pioneer period is supposed to be relieved in the first year.
Yes.
If it's not relieved, what's the law?
Oh.
So loss of the post pioneer period will now be carried forward indefinitely.
Okay. Then please, last one, please. For specialized business, the way we treat this as specialized business, I would say, for example, like British Airways, picking passengers from Nigeria, then to
Okay,
other.
GNGD card.
You said?
I said the global income, Nigerian income,
Yeah.
kind of thing. Yeah.
Yeah. So now, like the way we calculate this our specialized business in theoretical way, does it apply in practical aspect like that? For example,
Yeah,
like
it applies.
British Airways.
It applies.
That means British Airways compute CIT for their for their air transportation business.
Yes, but it's technically it's restricted to only income emanating from Nigeria.
You said?
I said technically it's restricted to only income generated from Nigeria. And that's why we only restrict, you at the long last, your tax is always computed or will be determined based on your income generated from Nigeria. Last.
Okay. So which means they will only be computing for okay. Oh, what you hear me? I understand now.
Yeah, that's it.
For the income alone generated from Nigeria, being a non.
Yeah.
Oh yeah.
Yeah. Correct.
Yeah, I think I'm done. Thank you.
Welcome. All right, Yusuf.
All right, so confirm you can hear me.
Yeah, please hear me. I can hear you. Go ahead.
Okay, so firstly, I have the issue that 2/3% restriction for capital allowance. What is it on? That is one. And the second one
It's on
is this
accessible profit.
is on accessible profits. That is
Yes,
that's accessible profit slash adjusted profit, right?
correct.
Okay. Then the second one was this CGT you just sold now. I don't know. I was giving indication that you should please recap on the land. That's the rollover part. You were mentioning something about them. If something is higher, something is lower.
Okay.
I did not get that part.
So what I was saying is that so now for your rollover relief, basically, your rollover relief is actually the idea of rollover relief is this. I think I should start from the idea part so that when you get the idea behind it, on interpreting it will be very easy. The idea there is this. You let's forget this land thing. Let's look at it hand to hand. So you have a car, right? So you
Okay.
bought a car 5 million and you are selling it to me 7 million,
Okay.
right? Now,
Yes.
in that instance, you've made a gain.
Yeah, two
The gain
million.
is 2 million naira.
Yes.
Technically, you're supposed to pay tax on the 2 million gain you made. You
Okay.
call that the capital gain tax. But
Yes.
now it's likely that upon selling your car to me, right, you now go to Kutonu to buy another car. Possibly you feel that your car is a little bit now below your car. Possibly it was Picanto you were using before. You're using Picanto or you were using, so you now feel like, no, you want to start buying
Yeah.
Benz. You want to use Benz, right?
Okay.
So
Yeah.
now, at that instance, we are saying that it's not fair on you as a person, right, to pay tax because the money you got from it was not used for your personal consumption. You used it to get a similar asset,
Okay.
right? So that's where the idea of the rollover now came in. That okay, in the case where you use the money to get an asset that is similar to the one you were using before, and largely for the same purpose, then we should now allow you reduce your tax. So there are
Okay.
three events. There are three events that will occur. There are events where you will not pay any tax at all because you are investing the money again, and you call that a full relief. And that will only occur, right, when the amount you invest now, say the amount of the Mercedes Benz is higher than the amount you sold your Picanto to me.
Okay. Now,
Does it make
higher
sense?
than the sales proceed.
Exactly. Is higher than the sales proceed. The amount you invest is higher than the sales proceed. So in that
Okay.
case, you will have a full relief, right? On the
Yes.
contrary, if the amount of a Mercedes Benz is lower than the amount you sold your Picanto to me, right? So what we
Yes.
say you have is a partial relief because eventually you'll be paying tax. Just that your tax will not be as much as it would have been if you had not used the money to buy Benz. Does it make sense? So that is the idea of relief. That's where we are now picking the lower of the sales proceeds and the amount reinvested. Does it make sense now? I think she's no longer here. Alexander. Alexander. Okay. Is it my network?
Sorry, can you hear me?
Okay. Yeah. Sorry. Okay, I'm here. Alexander is
Hello.
here. Okay.
Hello, hello, please,
Sorry. I
guys.
didn't.
Hold on.
Please scroll
Sorry, I
the
didn't know I was even muted.
scroll it up, sir. The
Okay.
solution.
Hello.
Hello.
Yeah, I was
Can
one
Alexander
was
guys hold on?
attending
So
to
Alexander, please hold on a little more. I thought she wasn't here. That's why I said we should
I
move
think
on
I
to
was muted mistakenly. All right, so I wanted to just is on that workings where you said you should pick the lower of the two. Yeah, I think you said you should subtract your cost
cost of
of
acquisition.
acquisitions from
Acquisition
that,
from it.
right?
Yes. Yes.
So after subtracting the cost of acquisition, okay, whatever we get, we subtract it from our normal sales proceed.
No, you
That's where I'm
deduct it
now
from
confused.
your initial capital gain. What should have been your capital gain at the beginning if you had not invested the money?
Okay. Okay, that's
So
where we deduct it from.
Exactly. So where
Okay,
you have
so
excess,
sorry.
right? Where
So
you have
if we did not reinvest in the same line of what's it called? Assets, how do we then treat that?
so in that case, there's no relief. It's not for the same
There's
purpose.
no relief. So we just go and treat our normal capital gains on that
Yes,
initial.
exactly.
Okay, okay,
Yes.
thank you.
Yeah. All right, Alexander.
Okay, sorry. I just want to get something straight. I've not downloaded the question, so I didn't follow when they were reading the question. Please, I just want you to for the sewing machine. Was there any reinvestment cost for the sewing machine and generator set, please?
Yes, they were amount invested for the sewing machine and generator sets.
Okay, but I didn't get those amounts for the reinvestment for the sewing machine and generating
So for the
cost.
sewing machine, right? For the sewing machine, we are not going to consider rollover relief at all. Because initially you even made loss at your disposal.
Yes, yes, yes.
Yeah, so we are not going to consider that. But
So
for the go ahead.
so how do I now treat, since there is loss at the initial stage, how do I now treat the other one for
You
the
can't
new cost
subject
of?
that. No, you move on, you move on. You don't have to
Okay,
treat
so
it
I just, oh, okay,
because
okay, thank you.
yes, you don't have to treat it.
Okay, okay.
All right.
Thank you so much.
You're welcome.
There's already past 10. I said we're
Yes,
going to
I
stop
know.
by 9.
I know my timekeepers are here, so I will actually keep the time. So no problem. So just keep your hand raised. I will attend to your questions in the next batch. Yeah. All right. Just stay on
My hand
call.
is paining me. Oh.
No, no, keep it like that. Keep it like that. Sorry. It's just to aid our movement. You see the way we are moving, eh? In case
Sorry,
when
just a quick one. I also teaching higher pushes in capital gain tax.
I should treat it. I should treat it.
Sorry, I just want to suggest that can you like stop this recording and then start another one so that we can just pick them by topics like that.
No, it's revision now. It's revision class. So you have to stay till okay, that works really. Although the point now is that works to be honest. I wanted to do this.